Yes, I am somewhat, I'm a positive guy, but I'll tell you my introduction to cryptocurrency and Bitcoin in general, I was downright negative. Just to give you a little background on myself, I'm a global macro investor by experience, specialized in fiat currencies. In 2012, I kind of stumbled across Bitcoin. I think I read an article in the Financial Times, I believe it was. And so the article talked about this, and I thought, well, isn't that nice little nerd money? That's kind of great. They're going to have a great time with it, but it's going to fail. It's not going to work. There's no army behind it. The government's not going to take it for taxes. You're not going to be able to do anything with it. So, I proudly went on CNBC, not doing any research, and said, this is a scam. It's not going to work. The price promptly went from $30 to $130 in the next couple months. Then it went from $130 to $700. At that point in time, I thought to myself, this thing is surely a bubble. There's no question in my mind it's a bubble. But a small little quote from George Soros kept rattling in my head. And the quote was this. He said, when I see a bubble, I buy that bubble, because that's how I make my money. And the essence of that is he gets in early on that bubble, and he wants everybody else to come in. Well, this was my bubble. Bitcoin was my bubble. I'm a currency investor. I saw it before anybody else. I know it's a bubble, but I know it's a bubble that's going to expand. So I bought it at 700. 3 weeks later, went to 1,200. Greatest trade of my life. I'm picking out the leather seats in my jet, thinking, this is it. I'm going to retire in a couple months. China decides to ban Bitcoin for the first time, and it dropped down to 300. Now, I'd made every single mistake that I tell investors not to make, my traders not to make. I tell them, don't turn a trade into investment. Do your research. Understand what you're buying. I did none of those with Bitcoin. And so I ended up with Bitcoin, not knowing what it is, not having any idea what to do with it. And so here I was. And I decided, well, I better start researching what I own. When I did, like many people do, I dove down that rabbit hole and went, wow, this is going to change everything about what I do, the way I invest, the way the back office operates, and in fact, actually the way the financial system operates. Spent about a year diving into it, really understanding it. Ended up writing a book about it in 2014. Started investing myself in both cryptocurrencies and some equities in the space, or angel investing in the space. And about a year ago, started the hedge fund to trade exclusively in Bitcoin or in cryptocurrencies. So here I am today talking to you about the landscape, about the ecosystem. You can also see me sometimes on CNBC on Fast Money. In fact, I'll call in later tonight to the show. They tracked me down here in Switzerland. And so those of you who are sick of seeing cryptocurrency on CNBC, I'm sorry. Those of you who like it, you're welcome. Because for the last 4 or 5 years, I've been hammering behind the scenes. You have to cover this asset class. It is the new asset class. It captures millennials. It captures venture capital investing. It captures everything. So price rise seemed to change their mind, just like it did with me. So let me talk a little bit about how I see the space, why I got so excited about it, and how I'm investing in the space right now, and then what I think what the future is going to look like. So first of all, here's a quote that I came up with a while back, that it is the most important innovation in the history of finance. And it's a big statement. I'm prone to hyperbole. I love the hyperbole, so take it for what it is. But I do think it's incredibly important. So why do I think it's important? Well, we have a 600-year-old process for verifying and transferring transactions. So 600 years ago, roughly, maybe a little bit longer, financial historians may dispute my time frame, but a bunch of bankers over in Italy, just a few hundred miles from here, decided to use this double entry accounting system. Worked fantastic. They could put an asset here, a liability there. It was a nice record of every single transaction. What was great about it is that they now stood in the middle. And anybody who wanted to transfer the asset, anybody who wanted to store the asset, anyone who wanted the record, had to come and ask them about who owns it. Has it been transferred? What's the provenance of this? And so they got to clip a little fee. They did pretty well, okay? They had this big ledger of all the assets in the world, and they built banking dynasties on them. That's worked for 600 years. Then all of a sudden comes this little program in 2009 by some random person or people, he, she, we don't know, that disrupts this entire process. And that's, to me, what blockchain, Bitcoin, cryptocurrencies are. It is a disruptive software that automates the verifying and transfer of assets. So the ledger, okay, the ledger that the bankers in the double entry accounting system had is now available to everybody. You don't have to go to one single person in Italy or one single person in Zurich. And I think I'm safe saying that because I didn't see too many bankers here. But the ledger is available. Everybody can see who owns it, who transferred it, where it was, where it's been, and where it exists today. The ledger is also automated. This is software, just like anything else we do, just like an Excel spreadsheet. It's software. It automates the whole process. I don't need somebody in the middle writing a piece of paper, copying a slip. And the ledger's global. And that's the biggest change to me. So if you think about the process we've had for banking and transferring assets over the last 600 years, you had your assets in one single jurisdiction. If you wanted it to be global or you wanted to look at a ledger somewhere else, you really couldn't do it. You had to go to 3 or 4 different banks. You had to verify it in different jurisdictions. But now we have a global ledger, open to everybody, that automates every single transaction that we can do. So we had a little discussion about whether code is law. I'll add one in there. Perhaps this is controversial, but if the ledger is code, if we've now codified and written the ledger into software, then that code now becomes the intermediary. The code is your traditional banker, your transactional banker. So this is where the disintermediation happens, and this is, to me, what got me so excited about it. Because if you look at any industry, anytime it's been disintermediated, there's just tremendous value to be made from the investing side, okay? Even just look at what's going on in media now, or even when blogs came along, what happened to the New York Times, right? That was complete disintermediated process, and blogs became huge, even though they started off as this kind of niche little thing. Now the New York Times has a whole section of their blogs. Andrew Ross Sorkin, I think, made $1 billion off of his blog called The Deal, what was it called? The Deal Book. So the code is now your intermediary. What does that mean for finance? And this is my view, and this is how I look at the space. First of all, you have transactional finance, just simply moving money around the world, moving assets around the world. That's commoditized. That's going to become commoditized with blockchain. Project financing. It's becoming distributed and democratized. They had a great discussion here about whether VCs are being disrupted or not. My view is they are. I do agree with Daniel, though. There is an investment process that makes you a successful investor. That process is not going away because of this technology. But the access and the way that projects are financed are changing. We can argue about whether ICOs are a bubble. There's some junk out there. There's some really good ones. But the one thing that I do know that ICOs have shown is I can now access a global pool of capital that I've never, ever been able to do before, without an intermediary, with a couple of lines of code, and probably a good marketing piece. And now all of a sudden, I've been able to market to everybody in the world. Somebody could put 50 bucks in and start and invest in my next Microsoft or next Facebook. That hasn't been able to happen before. So now we have distributed financing, democratized financing to everybody. Melton made a great point earlier that why should I be restricted from investing in something? Because I don't have enough assets. I could be the smartest person in the world, have 4 PhDs, done all kinds of research, but you know what? I never monetized it into assets. I'm not sophisticated? Why not? Who says that? That changes here with blockchain, with ICOs. So we have the capital, again, I mentioned, sourced from a global pool. So what does this look like? What are the elements here of disintermediation? First of all, it's having a global impact. If we look back at the internet boom, that in the beginning was really kind of a US phenomenon, right? If you wanted to invest in that, you had to have it, well, or you couldn't have an E-Trade account early, but you had to have a US brokerage account, you had to be a US VC, go to Silicon Valley, and invest that way. This is global. Many of the ICOs that have raised hundreds of millions, if not billions of dollars, have completely blacklisted the US. We don't want you as investors. Regulations are too hard. And you know what? It didn't change a thing for them. They raised just as much money. Number two, you now have this global phenomenon, but it's mashing against local regulations. This is an area that you're going to hear a lot about, and I bet a lot of people in this room are working on this. But how do you have a globally issued asset that trades anywhere it wants to trade fit in with all the local regulation? That's going to be new. That's challenging all the paradigms. Not only is that challenging the paradigms, the idea of value creation is challenging paradigms. The same problem that I had with Bitcoin in the beginning, that it's not backed by anything, that it's not, the government won't take taxes, there's no army. Bitcoin and ICOs and all these other currencies that came from nothing have proven there is another way for value creation that maybe we haven't thought of. Now, most of these are going to go to zero. I agree. I forget who was on earlier said about 1% of these assets today are probably worth anything. I think that's a good estimate. You know, there's 1,500. Maybe there's 10 or 15 that are worth it. But you know what? The miracle isn't that the 10 or 15 are worth it. The miracle is that they had any worth at all. This thing came from nowhere, right? Just the fact that it was a penny, that somebody valued it, and people started transferring around, that's the miracle. Now it's subject to the growth patterns that we as human beings go. And that'll be booms and busts and bubbles and crash. And it'll be great for me on CNBC because I can talk about it all the time. And I'll still have a job. So thank you, human beings, for doing that. Finally, once we break through all of that, once we figure out how to have a globally issued asset with local regulations, once we break through our mental paradigms, then you end up, ultimately, and this is my view, with a global financial system. And this is years away. We have a lot of infrastructure to build, but that to me is what this disruption looks like in a big picture. What do we got next? Okay, so we now have a new economy. We have a global financial system. Let's drill down into the protocols today and how I think about the space to take advantage and how to invest in this space. I got a bunch of protocols here. These are a bunch of coins. I focus on digital currencies. That's just where I am. I put a bunch of protocols up here. If your favorite coin is up here, I'm sorry. Don't get a Twitter handle, an anonymous Twitter handle, and say, hey, BK, you didn't mention this coin. It's up there. I just picked up a couple of them. I'm like Switzerland. I'm neutral on these things. To me, as long as they go up, I'm a happy guy. So let's think about how this works, okay? So let's say I'm using one of the payment protocols, okay? Bitcoin, Litecoin, since Bobby Lee's here, let's say Litecoin, okay? So I'm in Switzerland, and I'm paying somebody in Brazil. I'm using Litecoin because it's fast. I don't have to go through the banking system. It's not going to take me days. I don't have to get a letter of credit. Great, solves a problem for me. Okay, but what legal system do I use? Do I use the Switzerland legal system? Do I use Brazil? What lawyer do I call? Well, perhaps that's where the contract protocols come in. Ethereum, Neo, EOS, Cardano, any of those. Perhaps these protocols, these smart contract protocols, are what the new legal system is. And by new legal system is these are the rules that we follow when we're transferring money around the world. Again, challenging to the global paradigm, but something to think about. Storage is next. Okay, I now have this transaction that I've done with Litecoin. I have my legal contract in place with Ethereum or any of the others. Where do I store that asset? And what jurisdiction and what laws go around that? Do I store it in Switzerland? Do I store it in Brazil? If something goes wrong, what are the recourses of that? In which jurisdiction? That's why storage becomes important in this ecosystem. This is now blockchain-based storage. Globally based storage on a globally decentralized computer. That solves a problem. So that's why I like those. Privacy. A lot of these coins, Dash, Monero, Zcash, they get a bad rap, right? They're used for drug dealing. They're used for hiring hitmen on the internet, so I'm told. I've never looked it up, I swear. But they're used for nefarious purposes. But there actually really is a good use case for this, okay? As this ecosystem expands, we're going to be sending large amounts of money around the world. And let's say that I'm UBS and I'm sending it to Banco Santander. Do I really want the whole world to know that I just sent $100 million around the world? There's no reason why everybody should know that. There's no reason why everybody should run in front of my trade. So I want to use a privacy coin. Perhaps that privacy layer is something that I want to use. Finally, governance. Or not finally. Let's move on to governance. Great discussion in the last panel about whether code is law and then whether we're going to see each other in court. Well, I'm of the belief that we have this immutable ledger that says, yes, I sent this to you. We have a smart contract written that lays out everything we agreed on. We've stored it in the right place. We've done all this, but we're human beings. And human beings disagree on things. And human beings make mistakes. And human beings misinterpret things. So now we need a governance system. There's a couple protocols that are working on that. Decred's one of them. Tezos is one of them. I believe they'll be presenting here tomorrow, I think. But now we need a protocol that does the governance, that's the judicial system of the ecosystem. And then finally, interoperability. If I have to use all these coins and I have to use all these protocols, it's going to get pretty confusing. And now I've created a real problem, and I've created the same system we have now. You're going to need interoperability between these blockchains, almost a web of blockchains. And to me, that's how I view the entire ecosystem. So you have each of these protocols doing what they do best, interacting around the world on an internet of blockchains. And to me, Cosmos is one of our investments. I think that's a great way to do it. There's plenty of other ways around there. So that, to me, is the protocols for the new investment economy. Now let's just look about how this is disrupting the old economy. And perhaps, I always tell people, if you're worried about it being disruptive, take a look at what you're doing today. Figure out if there's a way it can fit into this new economy, because the opportunities are massive. It's wide open. Figure out how it fits into the new economy and do that. You're going to be much better off. Capital markets disruption. Digital currencies, blockchain assets, disrupting the traditional assets. Talked a little bit about securities tokens coming out. To me, that's going to be the big theme for 2018. The idea that I can now issue a security on a blockchain. I don't need a back office anymore, the clearing houses anymore. It's all done on blockchain. So the entire backbone of the traditional financial markets are going to be disrupted. Now, if you're just trading assets or you're just moving assets around, you may not notice it. It may all go on behind the scenes. But more than likely, what you'll see is headcount and staff in the middle and back office be reduced. Costs go down. Good for some, not so good for those who get reduced. For entrepreneurs, entrepreneurs now have a choice. There's a global capital pool out there. Some of it's smart money, some of it's dumb money. Maybe as an entrepreneur, you want the dumb money because you're going to get a better valuation. I don't know, not my choice. But for entrepreneurs, for the first time, they can now access a global capital pool. That's never happened before. And if this is a bubble, and I'm sure we will hit a bubble because that's what we as humans do. We ride the fear and the greed, and we get over enthusiastic about things. But if this is a bubble, the potential for this thing to grow much bigger is more than anything we've seen. I mean, in the internet bubble, again, you really had to be a US investor, or at least have access to that, because that's where all the companies traded. This is something that tomorrow I can go out and access 100 million people like that. Initial coin offerings, disrupting the VC model. Robust discussion on that. I won't get into it too much, but the idea that you can tokenize your undeveloped protocol, that you can effectively crowdsource without any middle and back office, that's disruptive. Some VCs, their value proposition was, hey, we see the deals that nobody else sees, and we're going to get you in. We're kind of the gatekeeper. That role's gone. Being a good investor, different story. But the role of the gatekeeper and the showing people, here's the good deals, we're going to get you in, and you can only get them through us, those days are over for VCs, in my view. And I already talked about securities tokens. But here's what's interesting about securities tokens, I think, if you're an investment banker. And I've talked to a couple of friends of mine that are investment bankers getting into this space. If I'm a company and I've issued a securities token, and let's say I sell 10% of my company in an ICO, I'm effectively public from day one. So traditionally, 3 to 5 years down the road, I might want to do an IPO. That's how it is. The VCs come in, 3 to 5 year exit plan, I'm going to do my IPO. Well, how do you do an IPO if I've already gone public? What's the role of the investment banker if the company's already public? That is complete disruption of traditional investment banking. Some of the bankers that I've talked to, their view is, well, a token has value because of the network effect. So an investment banker's role may be less about how do we financially engineer this and how do we take you public, and more about how do we grow your network? How do we take what you already have and add value to the token that's already trading, and therefore be able to give you value for the tokens that you've retained on your balance sheet to sell at a later date? Perhaps that's one way. Financial services. I'm going to go quick because if there's any questions, I want to leave some time. But financial services disruption, my view, transaction costs decline or go to zero. There's really not any reason, if I want to send money to anyone in the world, I should pay anything for it with this technology. Ultimately, it'll go to near zero. There'll be some kind of cost. Credit finance splits from transactional finance. So if you look at a bank, we have the ones that send the money around the world. We have the others that lend money, usually together. To me, that split becomes more pronounced over time. Perhaps credit decisions get aided by artificial intelligence. That's above my pay grade, but that's certainly something that could come along. But in general, it's the modernization of the financial system. Regulatory disruption. This is the big one, and I don't have the answer for this yet. But again, you have a globally issued asset butting up against local regulations. So right now, if somebody wants to issue this asset, they have a couple different choices. They can issue it in the US and go with the US securities laws. That, to some people, is considered the gold standard, the highest bar of securities laws. Or you can issue it globally and not have to worry about those securities laws. But once it's trading, you know, what law and what regulations come into play? If I bring a thumb drive from Switzerland to the US with a legal asset here, and I'm in the US, with this thumb drive, did I now transfer it to the US? And am I now subject to those securities laws? And if I bought it here in Switzerland, but now I'm in the US, does it mean that I'm subject to those local regulations? I don't know. But that's going to be the big issue, and it's going to take a while to get through. So what does the new economy look like? Again, we have a globally issued assets. We have a smart contract legal system. We have some sort of government-based judicial system. My view is this would be done on blockchain, potentially with voting. People smarter than me are working on that. And I do think we're going to need some kind of a global regulatory scheme. Whether the global regulators get together and decide to work together, or it naturally just comes about. Somebody creates a global regulatory blockchain. I think somebody was talking about that earlier. But to me, I think that's the way it goes. So when I look at this, I've just laid out a whole bunch of opportunities, not just for me as a talking head on TV and a hedge fund manager, but for everybody in this room. There are so many things that need to be done in this space that if you just pick one little niche and apply what you are doing today and your expertise, you're going to kill it in this place. So maybe I'm being optimistic. As I said, that's my nature. But I just think over the next 3 to 5 years, we're looking at an internet type of a runway where you have this asset class with a bunch of money coming into it. You have infrastructure that needs to be built. You have industries that are being disruptive. You have change all around you. But as human beings, we have the ability to adapt. And I would encourage everybody in this room to adapt to this new paradigm. Thank you very much. We're out of time. I'll be down here if there are any other questions.